Hello, welcome to the European Open Briefing for Monday, May the 22nd. I'm Rafi Bajajian, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So it's a rather quiet start to the week, although we are seeing some movements in major currencies. The dollar has managed to rebound from earlier lows at the open of Asian trading, as we saw a bit of a turnaround in risk sentiment in Asian markets, despite the lingering uncertainty over what's happening at the White House regarding those investigations into Trump's campaign team's alleged links with Russian officials during the campaign. The euro is one of the benefactors of this uncertainty, apart from the fact that we are seeing improving outlook for the Eurozone economy. The euro hit a fresh 6-month high and is holding near those highs at the moment. The pound, though, although it did break above the 1.30 level last week, it's struggling to hold on to that level this morning because the latest opinion polls out of the UK suggest that Theresa May's Conservative Party has sharply reduced its lead against the opposition Labour Party. And the other focus this week is on oil prices, given that we've got the OPEC meeting on Thursday, on May 25th, where an extension to the output deal is strongly expected. But let's start with the dollar. Here we can see that against the yen, it's currently trading around 111.25. The dollar index, though, is pretty much stuck near 6 months lows, I guess today's small rebound is mainly due to positive risk sentiment in the markets. Overall, the US dollar is being weighed by the turmoil in Washington, given the potential risk. Although it is a small risk, there is that risk there that the recent events could lead to the impeachment of President Trump, but mainly in terms of the Forex markets, at least, it's that this could prove a distraction for the White House Trump administration and could lead to a delay to the planned tax reforms. We also had another missile test by North Korea over the weekend, but this time around this had very limited impact on financial markets. We're seeing very little risk from this, and it's worth mentioning that we've got quite a few big events this week. Apart from the OPEC meeting, we've got a NATO meeting as well on Thursday and a G7 summit on Fridays and Saturday. The reason why these are being this could have more of a impact on financial markets than usual, because it will be Trump's first NATO and G7 summits, and given his views on protectionism and on NATO as well, he's not a very strong fan of NATO, and the potential risk to global security and global trade policies. These meetings will be closely watched by investors. Also, tomorrow, the Trump presidency will propose the new budget for the US, and it could pave the way for tax cuts later in the year. Moving on to European currencies, we can see that the euro, it touched 1.1211 on Friday. That's the highest since the US election. It's currently trading just below the 1.12 level at 1.1188. The pound, though, saw a bigger dip this morning, and that's mainly due to those opinion polls that are showing declining support for the Conservative Party at the upcoming election on June the 8th in the UK. And also worth mentioning for the euro that we are seeing quite a bit of a contrast between what's happening in the Eurozone, where we're seeing more certainty as far as regional politics is concerned, and improving outlook for European economies, whereas in the US there are some concerns of a slowdown, plus the uncertainty regarding Trump's presidency. So all of that is helping the euro. Moving on to oil prices now, we can see oil hit a fresh 1-month high of $50.89 a barrel, and Brent, that's WTI oil, and Brent crude touched $54.17 a barrel. That's also a 1-month high, and that's mainly due to well, we have had strong signals from big producers such as Saudi Arabia and Russia that they're both in favor of extending the deal. Expectations are that we will get a 9-month extension until the end of March 2018. But there's also some talk that deeper cuts may be agreed, especially as Saudi Arabia has seen a big hit to its finances, to its budget revenues from the oil price crash that we saw a couple of years ago. And now that, and given the fact that the current output deal has had a limited impact in reducing supply, that we might have a deeper cut, and that would obviously be very positive for oil prices. And this is also helping the Canadian dollar, which is currently trading at a 4-week high against the US dollar. USD CAD is very close to dropping below 1.35, and this comes despite the fact that we saw a surprise drop in core inflation in Canada for April on Friday. So the oil prices are definitely helping Dulini. Moving on to today's economic calendar, we can see that we're not going to see any major data releases for the rest of the day. We did have strong exports data out of Japan. Exports rose by 7.5% year-on-year in April. Although that's below expectation, it's still a very healthy figure. We do have a couple of Fed speakers coming up later today. Patrick Harker and Neil Kashkari are both due to speak later in the day, although we don't know whether or not they will comment on monetary policy. We're also going to have an interview by Theresa May at 18 hours GMT. Though that might have less impact on financial markets than the Fed speakers. And just again to repeat what's coming up later in the week, we've got the FOMC minutes on Wednesday. That's going to be the last minutes before the June meeting, where a rate hike has been priced in by the markets, and the NATO and OPEC meetings on Thursday, and the G7 summit at the weekend. That's it from me. Thank you very much for watching, and have a great day.